I started out in the early days trading penny stocks. I bought a luxury vehicle and it cost a lot of money. I bought a BMW M3 and it was before I could afford such a vehicle. I'm investing in dividend stocks, a lot of them more established companies with a longer track record. And so it's very easy to monitor if things are going okay or if things are not going okay. I've gone from being more confident in myself to kind of more humble, and the progression continues. And so it's kind of like, even if you ask that same friend of mine who he's also the best man at my wedding, and he'd say, Ian, we almost didn't become friends in college because I thought you were just kind of full of yourself, but then I got to know you and you're actually really nice. On the shares I bought just earlier this year, they're already up 60%. I would say that's a little bit of skill, but also a lot of luck. Probably more luck than skill when you're looking at that amount of short time horizon. One of the best things that's come out of the internet is the education. And being able, wherever you are in the world, to surround yourself with the best and brightest. And that's what I really believe Blossom has accomplished.
Hello, everyone, and welcome back to another episode of Moementum Finance, where we dive into real conversations with people who are passionate about investing, personal growth, and building financial confidence. And today, I'm super honored and excited to be joined by Ian, a veteran investor, YouTuber, and a Blossom ambassador. Welcome to the show, Ian.
Hey, thanks, Mo. I appreciate that.
You know, funny enough, in some of my past conversations that I've talked to different folks, they've mentioned your name and talked about like one day, so I was talking to Ross, he was hoping that one day he gets to meet you. And I believe he actually finally got to meet you during one of the recent Blossom investors tours. So that's been fantastic.
Sure did.
I think it was about time to have you on the show.
Thank you so much. And it really was an honor meeting Russ. We met at the Blossom Social Investor Tour Chicago. It was the event of a lifetime. And Mo, it is an honor to be here on your podcast. I really love the work that you're doing here, and I always enjoy following your podcast.
I really appreciate that, Ian. That means so much, especially coming from you. For those who may not know you as well, why don't you give a quick introduction of yourself, your work, and anything that we need to know about you?
Yeah, sure. So my name is Ian. I go by PPC Ian. My main channel is on YouTube. So I have a YouTube channel about dividend stock investing, and I'm a long-term investor who invests for passive income, for cash flow, with the goal of having enough dividend income to cover all of my living expenses. And my style is classically defined as dividend growth investing. So I'm kind of more in, I would say, boring, old school style conservative investments that are lower yielding, but they do grow their dividends over time. And I've been at this a very long time, and I have a YouTube channel as well, and have probably been producing content on the internet about dividend investing since maybe 2017, sometime around then.
Been quite several years now, almost like eight years now.
Yeah,
Wow, that's
it's
incredible.
been a while.
Yeah, and then your investing journey started also a while back, over 20 years ago, if I recall correctly, based
That's
on
right.
some of your recent posts. So how did it all start for you? What brought you into the world of investing in the first place?
You know, that's a really good question. So it really dates back to my childhood. One of the things that my dad always watched was Wall Street Week with Louis Rukeyser, rest in peace. He's one of the kind of old school news commentators who really brought investing to households across America with his television program. And so I always remember at the time, I didn't really understand what was even being said all the time, but my dad was watching the show. And so I kind of had an affinity just for, hey, what's going on here? This sounds interesting with all of these stocks and bonds. And then over the years, I just started reading books and educating myself. I was lucky enough, even in my high school days, to have a few friends who were investing. Nothing crazy, but back in those days, it was kind of mutual funds and a few stocks here and there, and just always had an interest in it. And then when I started going to college at Stanford University, I joined the investing club there, and we had really the honor to manage real money, and had a lot of peers who were like-minded, who really enjoyed investing. We all had different strategies. It was crazy. Even back in those days, I was interested in the sin stocks just for the dividends, but I've really tried it all over the years. And I've kind of always had a interest in investing since my early days, but it took a while to really hone in on dividends. I had tried a bit of everything in the stock market, and I think I had always just been intrigued by the idea of having this opportunity. I think this is something that people forget, is that we're really blessed and lucky if you're watching this podcast today and you have an opportunity to actually own stocks, you're owning fractional pieces of world-class operating businesses. I just think that's almost like a privilege that we have, and I've always been intrigued by participating in the stock market.
And what specifically around those dividend payers was there that really intrigued you to choose them over many other businesses? And essentially, or do you only go for companies that do pay some levels of dividends?
That's a great question, Mo. So in the early days, like way back, no, I had kind of tried it all. And even back then, I think since my early days, always been intrigued by the idea of making a lot of money. And so I started out in the early days trading penny stocks. One of my earliest experiences investing was with the fiber optics industry. This was back in the days when like SDLI was acquired by JDS Uniphase. It was one of the really big fiber optics companies back in the early 2000s, late 90s, early 2000s era. And I was trying to trade and kind of make quick money with investing, but I had learned over the years that unfortunately that strategy for me at least wasn't working out very well. And as I kept researching, as I kept just learning through trial and error, the one strategy I kept coming back to over and over was dividend stock investing. And it was the kind of the seed was planted. I had read these books by the Motley Fool back in like the 1990s, like late 1990s, and they had these books about investing in dividend stocks and reinvesting dividends, and even these old school like dividend reinvestment plans. And I kept coming back to this, and I'm like, wait a minute, I've tried all these things, and this is the strategy that's consistently working for me. Not only am I seeing capital appreciation, but I'm receiving these dividend income, and the dividend income, it keeps getting bigger. And so I don't think in the early days I was thinking, hey, I'm going to retire early off of this, or I'm going to achieve FIRE, financial independence, retire early. I think that's a concept even that became more popular in, I'd say, the last few decades, like more recent years. But in the early years, it was more a function of, hey, Ian, this is what's working for you. And so it was at a certain point that I realized, hey, I'm a dividend investor.
That's really good, and it's probably your calling, right? Something that you found your niche and you're really good at it. I heard that part of your response that you did go to Stanford. Is that correct?
I sure did. I went to
Yeah. So as
Stanford
a
University, and believe it or not, I majored in computer science. And so I have a
wow.
technical background, but I've gone a non-technical route with a lot of the companies that I own. I mean, all these companies have implemented technology to some extent, but you would think with my background, I'd be a pure play like tech investor. And I decided to go a different route with the investing.
Yeah, that's amazing. Well, yeah, the one question that comes up out of it is that as somebody who's well educated, obviously Stanford is a top university in the world. How much do you see, and if any, the role of more quote unquote conventional formal education in somebody's success in the world of investing and finance in there? Do you see a connection there, or like, maybe investing shouldn't be as complex as it sounds? I'm
Goodness,
genuinely
that is
interested
a
in your perspective on this.
great question. I would say from an investing standpoint, there are a lot of benefits that can come from a formal education, but I do not think it's required at all, especially today with the amount of education that is available on the internet, on podcasts like this, and on YouTube channels and beyond. I would say the two or three biggest benefits I got from my formal education, I would say one was just getting very familiar with numbers. I majored in computer science, and so I had a lot of opportunity just to deal with complex problems and break them down into simpler problems. And I think that gave me a lot of confidence analyzing companies, because a hallmark of my strategy is really going through annual reports, quarterly reports, digging into the numbers, trying to understand what's really happening here. Like the text says one thing, but can I look at the numbers and find something else? And so it's that kind of investigation and that thought process that I learned quite a bit about. I would say the other thing was just being there at Stanford. One of the great things is we were in the investment club and we were managing real money. And having the opportunity to surround myself with other investors who had different approaches and different outlooks on life and different ways of doing things. I would say back in that day, it was kind of like the my mini like Blossom Social of the late 90s, early 2000s, I guess, when before there was social media for investors. And so being able to connect on a weekly basis and being held accountable as well to my own stock analysis, we would bring in formal stock reviews and we would have to present like, what does this company do? What are the numbers? What are you suggesting we buy it here or sell it here? And having a really good thesis around that, I would say that was really helpful for me. And maybe it was almost the start of what I'm doing here on YouTube these days and on Blossom Social, because I had an opportunity to learn how to present on stocks at an earlier age in my journey. I would say something else though about the formal education that's really helpful at Stanford is it was just so difficult. The computer science major. There was one story where me and my basically my best friend from college we were like pulling all nighters, like I'd say like maybe 5 to 7 nights in a row. And by the end of it, I was like almost hallucinating.
Wow.
It was kind of crazy, but it was to pass this class. We were building a compiler and it was really difficult. And we got it working, but it was kind of just the determination that's
Yeah.
required. I think that taught me a lot because I really learned in the real world through work experience that that's what's required these days to kind of make it to that finish line. It's not only a game of being smart, but it's a game of, I'd say, much more than that, having the patience and persistence. And so I think you can learn all those things though these days without a formal education.
I loved your conclusion as well on those three takeaways, particularly the last one, by having that diligence and patience, and really applying that to your life now, post many years after you being having graduated. These days, we have so many young investors, and at times, it does seem that they are tempted to go for the hot stock, the one that like the charts show that suddenly in the past week has gone up, skyrocketed, and everybody's now. What's your take on those? Like, how do you think the new investors, especially these days with a lot of media covering those hot stocks coming at them, should balance and be kind of mindful of those flashy stocks that are presented to them?
This is a really important question because and this still kind of ties into my past. It's interesting, even if you watch my evolution on YouTube, I can see it because I watch my old videos. I've gone from being more confident in myself to kind of more humble, and the progression continues. And so it's kind of like, even if you ask that same friend of mine who he is also the best man at my wedding, and he'd say, Ian, we almost didn't become friends in college because I thought you were just kind of full of yourself, but then I got to know you and you're actually really nice. But it's true, like back in like the earlier days, I had so much confidence and I would be stuck in my ways and I'd feel like, hey, there's only one way to do this. It's the right way. It's my way. And what I've learned over the years is I just keep an open mind. And so if there are different investors these days, maybe younger investors, even if they have less experience than me, if they're doing something differently than me, they may be right. So I'm always open to all different approaches, and I've become increasingly humble because I've realized our world is changing very fast and I need to adapt. I need to stay up to date with the new trends. Yes, I have a background in dividend investing, but I always have to question what I'm doing. And so I'm not against any approach, even from someone who has a lot less experience than me, because sometimes the best ideas are from the younger generations. And sometimes the younger generations, they may even know things that I'm just missing, the new trends. And so I get excited by these new trends. And in fact, at Blossom Social Investor Tour Toronto, which was really a life-changing event for me, one of the questions that was asked was, Ian, are there any new developments or new things in dividend investing? And the one answer I had was, the new thing there are some of these disruptive tech companies. They're now paying dividends. They're now growing their dividends. Two of them that I now own are Meta and Alphabet, and they're growing the dividends. And so I believe these could be great dividend growth stocks of the future. And I am trying to, when I see value, when the stocks are on sale, when they make sense for my particular situation, I'm looking at the newer stocks and technologies these days. Now, of course, I'm not trading in and out of anything. That just doesn't align with my personal strategy.
Yeah. And your point around, being open to learning and being humble and over time, that evolution that happens reminds me of a post that I read earlier today, just before our call from Fraser on Blossom. He was talking about as he was graduating from a university, in his smaller university at the time, he was like the top of the class and he was so confident in his abilities and whatnot. He described that as almost like a big fish in a small pond. And then later on, he goes on to another, like a bigger school and whatnot, surrounded by other smart folks, and then he realized soon enough that he's almost in his the way he describes it, a small fish in a bigger pond, and really being mindful of that. Sometimes, like, depending on the circle that we have, sometimes we might think ourselves like, oh, I'm know it all, whereas like maybe I think platforms like Blossom have really allowed us to be surrounded by so much more people that allows us to see different perspectives on topics. And to your point, I love that attitude as well. Being open, just because, like, for example, we may have certain style of investing doesn't mean other styles are wrong. It just may not be the one that maybe we are interested in. But having those essentially respectful dialogue, I think is super crucial, because at the end of the day, we are trying to support each other. Everybody's goal is to become successful in their journey. Why not help each other and collaborate and cheering on each other's success? Of course, having some sort of like a concrete dialogue, I think, is also powerful in there too.
Absolutely.
Yeah, Ian, you have approximately, based on what I heard around the Blossom, I think closer to that 40 or even more dividend paying stock. Is that still the case? And how do you kind of have the time to manage through that portfolio? Is it almost like a mini index fund that you've built in there?
It is. And yeah, I think I'm up to 42 now, if I recall correctly, because one of my stocks, Honeywell, had a spinoff,
Yeah.
Solstice, this last week. There was so much news and so much going on, but that's yet another position. Just into, I probably should have said earlier, but in terms of full disclosure, if I mention a stock today, I own it, and I'm not offering any investment advice either. I always have my disclaimers on these things. Okay, so back to the stock. So yes, I have over 40. And how do I manage it all? I'm just a real I'm just incredibly passionate about what I do, and I really take a lot of joy in analyzing companies. And so for me, it's really a passion, it's a labor of love. I enjoy what I do. I realize it's probably not for everyone because yeah, I do pour through a lot of annual reports, a lot of data, and I'm always monitoring my stocks. But what I would say for me that kind of helps me out is one, I'm buying these stocks that are of such high quality that if I miss an annual report, if I miss a quarter, it's not going to overly affect things in the long run. I'd say the other big takeaway there is I'm buy and hold forever. Yes, I have sold stocks before. Usually it's if I'm making some major life purchase like, hey, we're buying a house. I need a little more capital for the down payment. I may have to sell some stocks. But in general, my philosophy is, and there are exceptions, if something goes very bad with a company, they suspend the dividend permanently, the fundamentals are completely different than what I thought, I may end up selling the company. And that can happen. Any investor, and I always mention this, I think it's very important because people are watching us here on your podcast or on YouTube or they're on Blossom, and sometimes it's easy to forget that I'm just like everyone watching. And my portfolio, I'm going to have huge winners. I'm going to have some stocks that are okay. I'm going to have some losers too. And so there are losers from time to time, and I need to weed them out, so to speak. But how do I manage it? Buy and hold forever makes things a lot easier because if I say that up front that I'm buying and holding forever, well, there's going to be less opportunities for me to sell and less just general worrying day to day. Oh my goodness, this piece of news came out. How does that affect my strategy? That makes things a lot easier for me. Two, I'm investing in dividend stocks, a lot of them more established companies with a longer track record. And so it's very easy to monitor if things are going okay or if things are not going okay. What I love about it as well is it's pretty easy for me to tell at any given time which stocks in my portfolio are on sale. I'm a value investor. So, what I love about owning 42 positions is even in a market like this right now, where stocks are kind of expensive, there's always something on sale, at least one position, if not multiple. And so I like having that broader universe of stocks to select from as well. But yeah, it definitely is some overhead managing that amount of stocks. It may not be for everyone. It is quite a few positions. One more thought on that though. You mentioned ETF. This is very important for people watching. One thing that's influenced my journey tremendously is, look, I graduated Stanford. I've had a lot of jobs over the years, many of them kind of jobs that are prestigious. I was VP at a publicly traded company not that long after graduating. Maybe I got to that VP level, I don't know, somewhere around ten or so years after graduating college. That's pretty cool. And I've held a lot of notable positions in my career. But one thing I did realize in the corporate world is there are only so many positions at the top, and no matter how good you are, it's just a law of numbers. There's only so many companies in the world, and each company, it's kind of like a pyramid. There's going to be a few people at the top, and then the next, let's call those like C level. Under that, you're going to have like VP level, and there's going to be maybe a broader number of VPs, maybe double or triple the number of C level. And then under VP, maybe double that again or triple that again for directors, and so on and so forth. Down you go. If you want to make it all the way to the C level, I don't want to discourage anyone watching, but what I'm saying, like to be like CEO or COO at a large publicly traded company, it takes a lot. And it also there's a law of numbers. There's just only so many positions. But one thing I always share about dividend stocks, and that I believe in my own case and for anyone watching, is that you can be CEO of your stock portfolio. And so, yes, I do treat my dividend stock portfolio as my own ETF. I do own some ETFs as well, but I take it that seriously because it's a sense of pride for me in
Mhm.
life. And it's a sense of, hey, I have ownership over this. And no matter, look, I have a great job now and I love what I do. But also, above and beyond that, I have my own company here. It's my stock portfolio. I'm in charge. I'm the CEO. I get to make the decisions, and there's no limit to how many dividend investors there can be or stock market investors. There's no limits here. Anyone can do it no matter where they are in. And I think it's really important and motivating for people, especially if you may feel discouraged in your career, or you may feel like, hey, my career is not progressing as fast as I want, or maybe I don't know how I'm going to get to that next level. Sometimes you can just go to that next level by being your own boss. And that's how I look at stock market investing. And it's an alternative, or it could be a complement also just to starting your own business. A lot of people, because they want to be in control or they want to take their life to a level maybe they're not able to obtain in the traditional corporate route, they start a business. For me, well, and you can look at maybe my YouTube channel kind of like that, but it's not a huge business. Where I really focus my energies from an entrepreneurial standpoint is managing my own ETF, the PPCE in portfolio.
That's such a powerful perspective to have. Like even in the sense of a portfolio, to you borrow some of your points, as you're assigning and allocating capital to your portfolio, imagine you're now the head of your portfolio. How are you deciding on that? Which aspects of your portfolio, which positions within your portfolio deserve to be allocated more funds versus the other? So it's super powerful to see it that way. Speaking of YouTube, because you brought it up as well, you have done so well on YouTube and put so much effort into it as well. Ian, like over 500 videos already, more than 87,000 and counting subscribers. So super incredible and so powerful. Only knowing that I think you started that approximately 7-8 years ago. That's so wonderful. What keeps you motivated to continue putting out content on YouTube, on Blossom, and platforms like that?
Boy, it really is, I'd say, moments like this where I get to connect with other like-minded investors like yourself, and it's the opportunity to meet great people. I cannot tell you how many amazing, like, lifelong friendships I have built because of YouTube and because of Blossom Social and beyond. Not only meeting friends on the internet, but actually now meeting a lot of them in real life because I've had the opportunity to have meetups. I've had the opportunity just to grab coffee with people. Sometimes I'll say, "Hey, I'm going to be in XYZ city. Do you live there?" And they're like, "Yes, let's meet up for some coffee." And it has been life-changing because sometimes in my day-to-day life, I don't always run into investors, and especially dividend investors. People look at you like, wait, why are you investing in those boring companies? What do you mean dividend investing? And so having the opportunity to connect and globally as well, it's amazing how many subscribers I have, not only from the United States, but from Canada, but also from Europe and around the world. I've had so many different countries represented in the PPCE community. And the one thing that brings us all together is that passion for dividend stocks. So I would say for me, the biggest motivator really is the subscribers and the people, and it's really building those friendships with other people. But it's also gotten to a point as well where I have a lot of people that rely on the content, and I've had people write in like, hey Ian, this has changed my life. There's a lot of people who watched my channel and then they have implemented some of the strategies. Of course, I don't offer any kind of advice, but they've implemented it with their own take or their own spin on it, and they've retired, and they write in, they're like, Ian, you changed my life. I'm retired now. I'm living off of dividends. I'm like, wait, you did that before I did. And it makes me so happy to see these things. And so part of it these days is it's not always easy. Like yesterday was Saturday, so we're both of us are up early now Sunday morning. But a lot of the day yesterday I was behind, and I know what's coming up this next week, and I know I got to get my video done, and people are relying on me. And so sometimes it's just that it's like, hey, I don't know if I really wanted to work on the video, but at the same time, it's like this is a almost a responsibility at this point because it's like people are relying on this, and I need to produce something here for the community. And so it's been a fun journey, but I would also say it's not easy, and you know that as well as I do that. Boy, it is. There's a lot to content creation, and it's a real commitment, but it's something that also nothing in life that is worth having comes easy. And it's same with investing. That's why I'm willing to put in wait decades for
Yeah.
my financial freedom. It's fine. I understand that it takes time, and it's the same thing with YouTube and with just content creation in general. That you put in that work, and it really pays off. And I would say for me, like especially this year, it's been the biggest year for me, being able to finally meet like a lot of creators and a lot of fans in person at the Blossom social events was really special. And just how something that really like was touching for me was how kind and supportive the other creators are, because I met like creators that are way bigger than me, way more successful on YouTube or any other platform, and just how supportive and amazing and kind the content creators are in our industry. It's just so motivating, and that kind of motivated me to just keep going and also try to take what I'm doing to that next level.
And just so incredible. And along the way, I know you definitely enjoy and have fun too. So, I mean, I love some of your recent reels that you've sipping on your new protein infused Starbucks, I believe, drink. Yeah, the Kleenex one. It was so fun, and it's great because it obviously it takes a lot of efforts behind the scene, but why not have fun along the way as well?
And I
Yeah,
must give credit to my wife. She's
yeah.
the real brains behind the
Oh,
operation.
nice.
So she comes up with a lot of the funny and clever ideas, and is oftentimes behind the scenes filming me and all those kind of helping me with the thumbnails and editing different aspects of these videos. So it's important to realize, I think, with anything in life, it really is a team effort. And sometimes there are a lot of people behind the scenes, supporting all of us.
That's so powerful, so powerful duo for sure. What's one piece of advice, Ian, that you find yourself giving repeatedly to new investors?
Okay, so this is really important. I think that these days, because of how much content is online, and I think also because of what people see online, that a lot of people are promoting maybe on something like Instagram, that they're living this dream lifestyle and they have the nice car or the nice house or the fancy watch or whatever I think a lot of investors these days, they believe that investing is easy, or there's a quick road to riches, or there's maybe take on a little extra risk to try to reach these goals quickly. And so I'm always telling investors, especially newer investors, Just to be careful and be realistic that what you see sometimes on the internet, it's not always true. Or even if it is true, you don't know the real story of how long it took that person to get that car or that house. It may have taken a very long time, and you don't know kind of the challenge and the hard work and the setbacks that person faced before reaching that goal. And so I think it's important to always emphasize, especially as newer investors, that it is a long road. You have to be ready for setbacks. You want to be ready for the challenges that come along the path to reach success. And the most important related point to that is everyone on the internet has a strategy that they love, including myself. And we talk about what we love doing because it's the strategy that works for us. But whether you're watching me or someone else, always trust your own heart and come up with your own way of doing things. And it could be it could be my strategy, it could be a combination of my strategy, someone else's, it could be someone else's. It could be something you come up with that's brand new. But the only way I've found, at least in investing and business for that matter, or life in general, to have success is to have that dedication and go through the years and the periods of setback and the years of hard work. But the only way you're gonna stick with it is if you believe in what you're doing, and the only way you're gonna believe in it is if it's the strategy for you. So I think that's something I always emphasize these days is just do what works for you, and if it's different than what I do, that is okay.
And Ian, what's your take for folks who are new to investing and at the same time they're saying, you know what, I want to invest. I don't have large amounts of money, but I also don't have time. I don't have time to go and do individually research stocks, nor do I know where to begin. Maybe I haven't had education on that front. Do you see some elements of like place for them to consider index fund? Essentially, what's your take on index fund? Who do you think is more suitable from your perspective?
Okay, so that's a lot of good questions. I think the first part of the question is it's someone with hypothetically with less money and they're starting later. So that is, I think you have to acknowledge that is a more difficult situation to be in because the two things that are going to help the most with compounding money are capital invested and time. And if the capital invested is smaller and the time is lower, you are probably starting out in a situation that's a little, it's going to be a little more challenging. What I would say first is it's never too late and never discount yourself, never, discredit yourself or give up on your goals because success is possible for anyone. And some of the things I like to look at these days are we're all living longer. There are advances in medical technology. And so I guess what I'm saying, and we're all we can work longer if we want it. We don't have to retire at a traditional age. And there's alternative forms of work. We can work from home or freelancing or kind of the gig economy. There's different types of jobs. And so I would kind of first offer that up that your time horizon may be longer than you think. Also, what I would say in the modern world is there's this concept of geo arbitrage. One of the elements of my own story is we used to live in California and it's expensive in California. We lived in the San Francisco Bay Area, where I went to school at Stanford University, and that's an expensive area. And so a number of years ago, we moved to the greater Boise, Idaho area. And it's still a short plane flight to California when I have to go there for work. But I've been working remotely for a long time. I've been working remotely since before the pandemic. And so I continue to work remotely, so I had that geo arbitrage flexibility. And I would say for investors who may be starting a little later or a little more concerned about reaching their goals, try to understand if there are any trade-offs you can make because one of the biggest trade-offs is geo arbitrage, and that's something that's kind of a concept that has been made popular in more recent years, more recent decades. And so even if you are starting later, there are a lot of things you can do. But I guess going to the second part of the question, And I resonate with this so much in my own portfolio. You asked me, Ian, why do you own so many stocks? Well, part of it is I'm at a stage in my journey where I just am more conservative. I've made a lot of mistakes in my investing over the years because I learned through trial and error. Some of the investments I made, I if I went back, I would definitely do them differently. One such example that I've shared on my YouTube is even in recent years, this wasn't that long ago. I made a number of angel investments, and I did it at the time, honestly, for the wrong reasons. I think angel investing can go really well, and there's nothing wrong with it, but it should never be rushed, and you should really have good confidence in what you're investing in. The reason I was investing in some of these things was honestly just to feel like, hey, I'm an angel investor. I wanted
Mm,
to feel cool about myself. I'm at a point in my career where I can't make those kind of mistakes anymore. And so it's like I've
mhm,
done that. I did the angel
mhm.
stocks. I lost the money. It's gone. It's gone.
Mhm.
I day traded the penny stocks
Yeah.
way back. Those were in my college years between classes. I was on the computer trying to trade. That money, it's gone. And so I trial and error. I've learned a lot. But now that I'm in my mid 40s and I'm married, I have a wife, I have two kids, and I want to reach my goals. I think I
Mhm,
can get there in about 6 years. I can't afford to make big
mhm,
mistakes. And so you were asking, hey, why do you have all these stocks? That's part of it. But also, just over the last few years, I started adding in ETFs. And one of the reasons I own ETFs now is for even more broad diversification. And so, yes, if you were someone starting later and you had less time, less money, what I would say for those types of investors is I get it because I'm kind of I completely understand. You're probably if you're in those shoes, you can't afford to make big risks or big mistakes, and that's where index funds and ETFs can come in handy just because of the built-in diversification.
Yeah, no, that's definitely very important to consider. To your point, Ian, right? So, like, there are cases whereby, depending on the stage of your investment journey that you're in, depending on the stage of your life you're in, you may have the time or the knowledge to actually do your research, maybe learn from different folks that you come across on Blossom or YouTube. But at the end of the day, take that information, absorb it, and internalize it, and then based on that, come up with your own strategy and really go decide on how you want to invest. But the opposite of that, the total other extreme of that, could be cases whereby somebody at whatever stage in their life that it might be, they may not have that knowledge nor the time or interest to do that. And then at that point, we probably, rather than doing and trying to necessarily blindly copying somebody, maybe like a more of a broader, globally diversified, or even like if you're in the US, maybe like a US stock market or a total stock market or things of that nature might be probably a little bit more palatable, at least to consider, or at least to start with. Again, not
Absolutely.
financial advice, but something for folks to consider if they're totally lost and they don't know where to begin. Um,
Absolutely. And one of the concepts that and of course, not investment advice, but I recently got to speak with Joseph Hogue, who's the Bowtie Nation, and I met him through Blossom Social as well. Of course, he's a famous YouTuber, but it was through Blossom Social Investor Tour Chicago where we met up, and he spoke with me about how this concept that he employs of the core satellite strategy. And so the core of his portfolio are ETFs, broadly diversified, and then the satellite are individual stocks. And so
Interesting.
there's so many different ways to do it, but I do agree for someone like further along who, can't afford to lose money, these are the types of things at least to consider.
Right. Yeah, awesome. Speaking of Blossom and like the tours, you had the incredible opportunity of actually attending the closing bell for CBOE, right? How did that feel? What did it mean for you personally to be part of that
It
experience?
it was really special. It kind of been a lifelong goal of mine because it's so funny when I was just going back in my journey, when I was in college, I'd always been obsessed with stocks. And I was thinking at one point, will I be trading on the trading floor of one of these exchanges? And that never quite happened. I did apply for jobs at hedge funds, and it never quite worked out. I ended up going into technology instead, which worked out great. But it had always been a life goal of mine to actually attend and see what is it like on the trading floor and be there for an opening bell or a closing bell. And when the Blossom team invited me generously to attend the closing of that SIBO, It was a very special moment in my life. I will never forget it. It was incredible. It was like emotional to feel like, wow, I reached a milestone. And it kind of goes back to content creation as well, that you go on this journey and you don't know where it might lead you. And it's just amazing to think that, hey, I just started this YouTube channel back in the day. And in the early days, there weren't a lot of us speaking about investing, or especially dividend stocks. But I met Brandon Beavis back in the day, like way back in the early days of his YouTube channel, and we became friends. And it's so amazing just to see where that led to all these years later, that he co-founded this amazing company, and was so nice to remember me and invite me to this event, that I will never forget it.
That's so incredible. What an amazing experience that must have been. And speaking of Blossom, you're an ambassador of Blossom. You represent Blossom, and you've attended actually and spoken in various Blossom investment tours. How has a community like Blossom impacted your investment journey, or impacted essentially your connections that you've had along the way?
It has really taken what I am doing to the next level. So I'd say it's impacted me a few ways. It's impacted everything we've talked about today on the investing side, with the connections, the friendships, the networking, the ideas, the exchanging of ideas, all of that, as you would expect from a social network that is dedicated to investing, and just seeing other strategies, getting new ideas, all of those great things. And of course, I would say on that side of things, what I would also say about Blossom is it's just I would say, a healthier and more cordial and more of a community. Whereas sometimes on social media, you have maybe, it can get a little off track, or it might not be as focused or as productive. I've found on Blossom, the discussions I'm always having, they tend to be a lot more productive. And so for whatever reason, it just attracts good people there on the platform. It's really changed my life as a content creator, because what I've found that Blossom has done extremely well is this ambassador program. And through the ambassador program, I've had the opportunity to refer people into Blossom, to invest in, I have a small investment in Blossom. And of course, they've done the crowdfunding, which is, I think they did the largest crowdfunding in all of Canada's history, which is incredible. And so they truly believe in their ambassadors and members of the community, and have allowed them to invest in this platform. But for me, it's been transformative meeting other creators as well. So not only the investing stuff, but the content creation for investing, and seeing how other people are approaching it, and how they're doing it differently than I might, and just learning from the best. It's really honestly been a humbling experience, because I see what I'm doing, and I'm pretty good. I think I'm all right. But then when I see what some of these other creators are doing, I'm like, wow, this is a whole nother level of success. And so it's just inspiring. And I've always found in life that by surrounding yourself with the best people, with people who are going places, maybe people who are doing better than you, it challenges you yourself to improve and to grow as a person. And that's why I love, Mo, what you're doing with your podcast here, because you're bringing all of these esteemed guests to your podcast, and we can learn from you and your guests. And so this is just something I love about 2025. Sometimes I wish I could go back in time, because it's hard to break free from the internet. I'm always on my phone, and sometimes I just have to kind of remember to live life as well. But I'd say one of the best things that's come out of the internet is the education, and being able, wherever you are in the world, to surround yourself with the best and brightest. And that's what I really believe Blossom has accomplished.
100%. I mean, I can't believe like one day having you, for me, having the chance to talk to you, Ian, and so many amazing guests such as yourself. Like, honestly, it is truly the power of Blossom, as well as the connections, some of the connections that we made through the Blossom Ambassador program. So, super humbled and thankful for that. Today, we covered a variety of topics, from the importance of education and the role that it can play, surrounding yourself to others who are either ahead of you or are smart people who have done it differently, being open-minded, having that hustle mentality, and so many other factors. If you were to boil it down to, in your perspective, perhaps the most crucial ingredient to someone's success in their pursuit of financial independence. How would you describe that? What would you say is the most important one?
I would really say it's persistence. It's the determination and the persistence because honestly, these days with the amount of knowledge that is out there, picking stocks or ETFs, look, it's hard, especially for someone that's new to the game, but everyone's eventually going to figure out some kind of strategy that works for them. The most difficult thing I've found with investing is having the compounding work. The compounding, it just takes time. And to make it through those years of waiting it out, especially if you might be in a job that you don't like, or you're at a phase of life that is challenging. Maybe you're working really long hours and you're wondering, when am I ever going to reach my goals? It's having the persistence and dedication to keep going. And I can't emphasize that enough. This is a game of patience and waiting and being in the game for enough years just to allow the compounding to work. And I say this and it sounds easy because I know everyone listening, they're gonna make, okay, I got that. It's easy. But just wait. I'm telling you, it's not as easy as it sounds. And sometimes what I would say is there will be setbacks. I think it can be very demotivating if someone has to sell stocks or ETFs or pare back the portfolio. And it happens probably to most people at some point in their journey. There's going to be hard years too, where maybe you don't have as much money to deploy. It's like, hey, all my money right now, it's going towards something else. I'm buying a house, or I have some medical expenses, or I have to help out a family member or something. There's always going to be these periods of maybe slower growth, and they can be a little frustrating, but it's making it through those to the next chapter where, hey, yeah, I can allocate some more capital again and just staying in the game.
Yeah, 100%. That's such an important advice. And thanks for sharing that, Ian. The final question. So, I've introduced a segment into the podcast whereby, similar to the Diary of a CEO, so definitely learned that idea from them,
Yeah.
pretty much quote unquote copied it from there, is that whereby a previous guest asks a question to the next one. So, I'm not going to tell you who asked this one. I haven't told you actually about this question before either. What is one purchase that you regret the most? And what is one small purchase that has added so much value to your life?
So I don't have a ton of regrets. I'm gonna think about that one a little bit, but I can definitely give you one that's very top of mind that I value a lot. That was kind of a smaller purchase that I didn't. It's like almost an unexpected winner. So that one's really easy to start with. Caterpillar Company, ticker CAT. I bought this one back in 2013, and back then, I knew it was a good company, and I knew it paid a solid dividend and would keep increasing it, and I thought it would be a very steady, slow growth stock, and it's far exceeded my expectations. Um, it hits new milestones that I would have never imagined, and one of the things I've learned by owning Caterpillar actually is not to cut my winners, because there's so many times when I've thought, wait, this has gotten a little ahead of itself. It's gotten a little overvalued. I thought that when it hit 200, I thought that when it hit 300, I thought that when it hit 500 recently, and now it's at like 580 or something, or 570. It's just, look, I don't invest for the capital appreciation, but everyone looks at it, so I have to share it. I really, though, I am investing for their dividend, and my yield on cost on the first tranche now is like 7%. That doesn't even include reinvested dividends, so it's pretty good. I'd like to see it closer to 10, but it's going to get there. But it just surprised me how sometimes when you have a portfolio, there's going to be certain positions that just far exceed your expectations. And I think Caterpillar, most recently, people are speculating that with AI and new technology, this is going to be like the construction equipment of the future. And so the company just keeps growing. And I would have never guessed that back in 2013. And I'm now up on my first purchase, like over 500%. And that's as a slow, boring, old school dividend investor. So I think that would be a perfect example again of even small purchases, if they're held long enough and they keep compounding. I didn't put that much money into Caterpillar, but it's now 2.5% of the portfolio. And my portfolio, it's more mature. I've been doing this a long time. So 2.5% is pretty good. Like that's um That's very good. I would say I don't know if I have any stocks I've bought I really super regret. I've had ones that haven't done well, and I think this is very important. I just did a video I published yesterday, and I shared, 3 winners, 3 losers, because 'cause there's been a lot of news in the news cycle recently, and some of the companies I own, they've not had bad news, but they're just kind of, some varying levels of badness. When you have a portfolio of 40 or more positions, there's always gonna be some positions that, that just don't perform quite as well, or you're just gonna have to wait. Thing I want to point out that I think is really, really important is I'll give the example of Microsoft, which is actually a stock I don't own. If you look at Microsoft stock back in like the early 2000s, it went nowhere for a very long time. Like it was flat for many, many years, like over a decade. And many investors during that time period, maybe they sold or they thought it was never going to go up again. And now within the last decade or so, we all know what it's done. It's been one of the best performing stocks. And so sometimes I have stocks in my portfolio that are kind of plateauing
Hmm.
and you're just waiting. And this is part of the persistence that I talked about earlier. For me, at least, I'm willing to wait it out. If I have a stock that's going sideways for a long amount of time, I'm gonna wait it out. Actually, how I want to answer your question is with regrets. I would say probably the regret I do have with my investing is I could have been ahead a little further if I had been willing to break my rule on buying stocks that before they pay a dividend.
Hmm.
And so way back in the day when Google IPO'd, my wife was saying, "Hey Ian, we should buy some." I was like, "Well, it doesn't pay a dividend and it's not doesn't quite fit my investment criteria." So I just started buying it this year because now it does pay a dividend. And now on the shares I bought just earlier this year, they're already up 60%. I would say that's a little bit of skill, but also a lot of luck, probably more luck than skill when you're looking at that amount of short time horizon. But I think for me, is being so focused on these living by these rules. They've protected me from some mistakes, but they've also kept me away from some possible really, really amazing returns. Like I think, Caterpillar was good, but imagine if I bought Google when it IPO'd, and so there's those kinds of things I think about a lot. And that's why as I get further along in my investing, I just remember, Ian, you got to stay open minded and be humble and, always consider different opportunities.
Yeah, that's so fascinating. Thanks for sharing that, Ian. I think when I asked the question, I should have probably added a little more context to it because as somebody who's so passionate about dividend and stocks and investing, you obviously took that route. But I think one of the other lenses that I would like to challenge you with that is that what is one life purchase that you regret the most, and what is one life purchase that, like perhaps you found the most value in? It could be in a gadget, it could be something you bought. I'm curious to hear that aspect as well.
So I would say a life purchase that I I don't know if I super regret it, but it was a mistake. When I was early on in my career, I bought a luxury vehicle and it cost a lot of money. I bought a BMW M3 and it was before I could afford such a vehicle. And so when I bought the vehicle, I financed it and thankfully I was able to pay off the financing pretty quickly because at the time I worked at a tech company, and it got acquired. And because I had stock in the company, I got a pretty good payout for someone who was just starting out in his career. And so I used the money to pay off the car. But just imagine, instead of buying this fancy car, which is a depreciating asset that I later sold for much less than I paid for it, I don't even own the vehicle anymore. And yeah, I got a lot of years of enjoyment out of it. It was convertible. It was a lot of fun. If back in those days, if I just, maybe bought a more modest, normal vehicle and instead took the money that I had earned from that stock and placed it in stocks. It could have been an index fund. It could have been some dividend stocks. Could have really been anything in the stock market and let that compound all those years. That would have been a wiser decision because I think the biggest lesson from that is just delayed gratification. And what I found in my investing career, sometimes these days, I am a little bit more frugal. Someone was asking me recently in the comments, Ian, you used to buy a lot of Air Jordans. Are you still doing that? And I actually haven't bought a lot of them in recent years. I have a bunch. I have like a kind of a little collection, and I'm actually wearing it right now. But I enjoy them. What these days, even I'm being frugal because I sometimes feel like because I spent so much money early on when I was younger, I'm kind of playing catch up. And playing catch up is hard because you have fewer years for the compounding. And so then you get into a situation where for every dollar I wasted back then, I have to invest like 100 of them now. And so it's kind of, and maybe that's a little too dramatic what I just said, but it feels that way.
Yeah.
And so sometimes I feel now like, oh my gosh, I'm playing a little bit of catch up. And if I just wasn't, I mean, back then too, I lived in a fancy, like luxury apartment. And I'm in my first job. Do I really need to live in a luxury apartment, or could have I been a little more scrappy and maybe even had a roommate, or had just a cheaper place in a different, like a little, maybe different area of the city or something. It's just, I think some of those early spending habits
Hmm.
were probably regrets, but at the same time, it was fun. It was,
Yeah.
and I had a lot of fun, and it was good times. So I have very fond memories of those years as well. And honestly, that's when I was first dating my wife before we got married, and it was good years. It was good times. And so I'll always remember those years. But in terms of something I bought, I think this is gonna be so controversial. I don't know if I wanna say it because I did a video about this once, and I got a lot of really funny comments. I'm gonna tell you, but I'll first give you the context. So, I don't think it's bad to spend money, and in fact, maybe I'm reaching fire a lot later in life because I tell people I'm going for, like, a bigger fire. I want, I like things, and I I enjoy nice things, and so I do tend to spend money, but I've gotten better. But one of the things that I bought, and oh God, I don't know if I should even say this, but I will. Okay.
Hey.
So we purchased a timeshare, and this is one of the most
Yeah, I
controversial
can. Now
topics
I
in
see where you're going
finance.
with it.
This is not financial advice, as anything I'm saying is, and it's a luxury purchase. But and I'm saying I've run the calcs on it.
Yeah,
You
it's
break
personal,
e-
right?
you break even on this thing after say 20 years. It's not an investment. But why has it been and there's a lot of things I bought that I like, but why do I like this? Well, it forces us to go on vacation as a family every year, and we're going to Hawaii, to Maui, every year, and it's in good accommodations, like 1,100 square foot, two bedrooms, enough kitchen, enough space for everyone, and it's certainly a luxury purchase, and it's also a liability because there's maintenance fees, and the maintenance fees go up over time. And again, it's not like the best financial decision someone could make. But what I've learned in more recent years for me is I really value travel. And I really value time with the kids when they're young, with my wife, with our family, doing fun things and travel. And, it could have, instead of being a timeshare, it could have just been, hey, just spend the money going traveling. But for me, just, spending that money, it's an over and above kind of expense that is, probably like most people would say is, almost above the top. It's too much money, but at the same time, hey, we've really enjoyed those memories, and it keeps us on a schedule of, yeah, you're going on your vacation, and it honestly gives me more motivation to work hard because I'm like, I'm gonna work so hard. I'm gonna get my work done. I'm gonna do everything, right, because I know I've got this vacation coming.
That intentionality of wanting to spend time with your family, building those life-lasting memories together, and then really a part of your family values, right? Like,
Yeah.
spending time together, coming together, enjoying ourselves, like building those new memories, building those new experiences, learning from other cultures and different differences. So that's super powerful. Thank you so much, Ian, for spending a good hour on a Sunday morning, early Sunday morning here with me. And I know you took the time as well to come to your office. So I really appreciate that. It's been really an honor for me to have you on the show. Somebody of your caliber, your expertise and experience. I thought that after this interview, I got to know you a lot better, and I always enjoyed your contents, whether it's on YouTube or on Blossom. So thank you so much for accepting my invite and coming on the show.
Goodness, Mo, I can't thank you enough, and I'm honored to be here as someone of your caliber. And what you're doing on your channel with all of these interviews and what you share on Blossom with your portfolio, which is really successful. So thank you for having me here, and it's really my honor. I appreciate it.
Thanks so much. I appreciate that. That means so much to me.